Hi, Matt. Great to be on the show again. My name is Brett Richards. I am the CEO of Goldshore Resources. We trade on the Toronto Venture Exchange under GSHR and on the OTCQB in the US under GSHRF. We are kind of an emerging development company. We acquired the Moss Lake project from Wesdome Gold Mines for $52 million in cash and shares last year. We were admitted for trading on June 4th of 2021 of last year. And we have embarked on a very large and comprehensive exploration program, which I'd love to share with your viewers.
Brett, good to see you again. And we caught up face to face back in November in London. It was the first time we'd heard the story, and I was kind of fascinated by how you're going to move this thing forward. Tell me this: since after we spoke, you raised a little bit more money to kind of. To what ends? You've got 20 million now, war chest. What are you going to be doing with it?
So, you're right. We put away $10 million in November, and we put away another $10 million just recently. And the rationale is, I like to raise money when it's available, not when we need it. And this is we had so much support recently for this last financing that. This really kind of helps our strategy of accelerating the development, which is already quite large. But we're going to be moving up to 8 or 9 drill rigs on the Moss Lake project, which is going to have 2 or 3 rigs at Moss Lake and 2 or 3 rigs at Coldstream and North Coldstream and Iris Lake, and also 2 or 3 rigs down the southwest at Hanlon Lake. So we're really accelerating kind of the program, and that that's really the use of proceeds is going to be specifically for that.
Okay, and I do want to talk about that kind of verification, infill, and step out drilling, and also the copper component too. But you used a phrase there, which we sometimes talk about with companies and bankers, which is you like to take the money when you can, or when it's available, not when you need it. Just give us the rationale behind that.
Sure. So we left 2021. We had around I'm going to say around 16 or 17 million dollars in the bank, and we had an adequate supply to service our exploration program well into 2022. There were a number of geopolitical events and a number of global events that happened in Q1 that made me very nervous. And the first one was starting to see the signs of hyperinflation. We started to get the report back on Q3, Q4. US CPI inflation being kind of 7%, between 5.5% and 6% in Q3 and 7% going forward. And then we started to hear about the crisis between Russia and the Ukraine. And for me, it resonated that this risk-off approach with investors could actually get larger than what it did in February and into early March. And the markets were still open for financing. So I made the decision, irrespective of the impact it has on dilution, and I am very sensitive to dilution, but I simply didn't want to be in a position in June, July, or August where the market was completely closed due to other kind of macro factors in the world. And we have to start to kind of decelerate our exploration program, and that's just not a good place to be. So we put away another $10 million in March and closed it early April. And we're well positioned now to get through our program, get well down the road in our program for the balance of this year.
Right. I mean, that's a really important part to kind of help your shareholders or people looking in to understand, because you are still a small company at this point, albeit with all categories 4 million ounces. You're sub $60 million. There's been a lot of pressure on junior equities, especially in the mining space for the last few months. But you felt this is worth the risk because it gives you control of the near and medium term. So in terms of being able to do what you want, you think is dilution worth taking now?
Yeah, it's painful. And let's face it, from our original 100 million outstanding shares, we've increased our share float by 35% throughout the 3 fundraisings. And I get it. It's not ideal, but what we're trying to do, and when we're continuing to be consistent with what we said from the beginning, and that is we are trying to create as much value in as short a period of time as possible. And then once we've done that, and once we see the results of our efforts in not only a resource estimation update that's going to come at the end of this year and maybe January of next year, but also a brand new PEA based on the larger resource. And when we get to that stage, then we'll determine what the future looks like then. But getting there as fast as possible in this very, very volatile and fragile market, I think is very, very important.
But is that a factor of, we talked about the quality of the board last time out. In terms of your experience, obviously time is money, cliche, but true. Well, first of all, was there 100% consensus on that thinking? And why do you think that is the right course of action? Because some people would come on here and go, hey, we just need to hunker down. We need to kind of wait this thing out. The market's not quite there yet. Let's just wait it out. Why is your choice the best choice?
I think, as we talked before, Matt, I have a very balanced board of senior guys who have been around this business, some of them 30 years, in my case, 36 years. I've seen a number of cycles. I've also seen companies go down for the wrong reasons. 2008 was a good reason. It wasn't a good reason, but I saw a lot of great companies fail as a result of it. We saw speed bumps in other kind of, Black Thursday, Black Monday. We've seen other major events with good companies where they've lost 80, 90% of their value. I just felt that if we could solidify the coffers to get us through our program, then it de-risks our approach to creating this value. And I think there was 100% consensus to do this. I did a presentation for our board and shared my view. And the younger guys on the board who maybe haven't seen as many cycles, who are they're very aggressive and they're entrepreneurial and they do all the right things. Even they said, you know what, this is a good idea because you're protecting the downside. And I like to always protect the downside first. And we want to explore the upside, and we're going to be able to do that, but we're going to do it on our terms. And I think beyond 8, 9, 10 months, I don't think we can predict what that's going to be. And quite frankly, the dilution to go beyond that just doesn't make any sense. So it was just a balance.
Okay, understood. So the ambition and the intent is there. Let's go and talk about the drilling, because that was the easiest bit for me to understand last time out. You said, right, we're going to add another 100,000 meters to the already 110 at Moss Lake, 25 verification, 25 infill, I think it was 25 step out, and then a remainder on our copper component. So what have you done since we last spoke in November? Yeah,
we've got through some of the program, probably not as much as we would have liked to have. There were a number of factors through kind of December, January, February. We had a really, really hard COVID spell up north. We had 70% more snowfall this year. We had over 11 feet of snow, which is about 3 meters of snow in Thunder Bay. So there were days where we actually couldn't work at all because of so much snowfall. And compounding the snowfall, we had colder than normal weather conditions. We had, I think, 30 days over minus 30 degrees Celsius. So it was just challenging, and we prepare for all that as best we can. There's a lot of things you just physically can't do in this climate. So we had tempered our expectations of what we were going to do this winter, which the $10 million raise now allows us to actually ramp up and scale up and actually perform faster than we had originally planned. We're going to make up for a bit of ground, but we're still on target. And this is the calibration to get through this program this year has always been there. And it's just sometimes it flexes a bit. So we've got through around 21,000 meters now, and we're going to go probably 30 to 40,000 meters a quarter between now and the end of the year. So we may well get that done before the end of the year, but let's plan for success, and quite frankly, that's what we've done.
Okay, so break down the type of drillings for me again, if you don't mind, because
Yep.
you're already sitting on 4 million ounces of all categories, 1.5 for the M&I, right? Clearly, you picked this up from Wesdome. There's some verification drilling you mentioned you wanted to do. Do you think now, having had a bit of time on the ground, you don't need to do as much as the 25? Do you think you can do a bit more, that i.e. the data is good, and you can do more of this infill drilling? Because you're aiming for 10 million ounces. That's what you keep telling the markets, what you told me.
Yep. And yeah, we probably will kind of rebalance what we do for verification, what we do for infill, what we do for step out. I think one of the big things that I think changed the game a little bit, on March the 2nd, we put out a press release where we had drilled into a feeder structure in hole 8. And those results came back. We drilled it in December, but the results just came back in March, and that speaks to a bit of the assay turnaround time still too. But we ended up hitting a target of 6 grams, almost 6 grams at 61 meters, and there were some substantial components within that hole, 9 meters at 8 grams, etc., whereby it was quite meaningful. So we started to look at what we had done with, the VTEM survey. We on March 10th put out a press release on the interpretation of that VTEM survey to give everybody kind of a better understanding. So that 6 meters at kind of 6 grams per ton at 60 meters that we had put out on March 2nd was a big hole. It was like 270 meters at a gram. So it was a very, very, very solid hole for us. Now, we took the VTEM interpretation, we took the geophysical signature of Moss Lake, and we extrapolated it over our entire land package. And what it reveals is 11 brand new targets at Moss Lake that are, I'll say brand new. They are outside of the existing resource, but there is known mineralization there because there's historic drilling that has illustrated there's 1.2, 1.3 grams over 50, 60, 100 meters in some cases. So I think the recalibration of what we need to verify, the recalibration of how we're going to, scope this out so we can show a path to 10 million ounces has changed. It's a positive change for sure, because in that VTEM interpretation, and I'm going to project now a little further, we have 29 undrilled high priority targets. Some of them are up at Coldstream and North Coldstream and Iris Lake that have been identified. And some of them are down at Hamlin Lake, which are these two areas are copper gold. But we've also done some historic logging and assaying of North Coldstream core that has been previously unsampled. And we came up with 0.2 to 0.5% cobalt. So there's so many permutations, very, very positive permutations we start to drill into as far as the data goes. We just now need to start and prioritize. Our first priority is tier 1 asset. We want to make this Moss Lake a tier 1 asset. 10 million ounces is the base for that statement. And we want to show a path to get there. Everything else is what I would say free upside, but this free upside is starting to look more and more attractive as we start to gather more data. And this whole process has been data driven. Right.
But it's free upside if it doesn't distract you, right? Because, putting out 6 grams over 60 meters at Moss Lake is great, but it's different from what what you expected, I suspect, and different from what the story you've been telling, right? So there was barely a blip in the market. Market moved to about 5%, came straight back off again after that headline. So they want you, if you are talking about an accelerated delivery into an upgraded resource and hopefully a PEA in Q1 next year on that, they want you to be laser focused. So is that a distraction, or is that genuine value to the current story, or is it going to sidetrack you somewhat?
No, I actually think we can do everything, and we're not going to be all thing to all people, but there's only so much work we can be doing at Moss Lake, and 4 rigs is about our ability to do it. There's a number of, I don't want to get into the details, but there's a number of logistic matters, there's permitting, there is road permitting, there's water permitting, there's trail permitting. All those things have to kind of be done in kind of a sequence. So managing more than 4 rigs is probably a bit unmanageable. And collecting and analyzing and interpreting that data is our first priority. But we still have bandwidth to work outside of that and get drilling out in kind of cold stream to test some of these, also high priority targets. And the assays will come back in 6, 8, 12 weeks, and we'll start to look at them then. But getting the drilling done is the most important. Using the seasonality. So we're going to use the spring, the summer, and the fall, the typically dry air time, to be able to get out into the bush and to be able to do all of this.
Okay, and because it's almost like there's sort of information overload in a way. 29 undrilled high priority targets, awesome, but they're just that, they're targets, right? But how do you go about prioritizing what's important and what's not? You've said the drilling is important. You laid that out for me in November. You've been repeating it in the market steadily, and hopefully more of the same, please. But how? Because I know you get 20 million, but you're sort of cash constrained in the sense that if you've got to deliver an updated resource, it's got to be better than what went before. You're going to hopefully bring more inferred over into the M&I category. That you've probably allocated a budget for that, and you know what you've kind of got left to do all of these other non-core priority things, if any of them. So how have you broken that down?
So we're probably going to spend half of our time, half of our energy, half of our spend, and half of our drilling capacity from now until, let's call it June, on Moss Lake. And I say half because we're only operating at half capacity right now. So it's 100% of our capacity. But when we go from 4 rigs to 8 rigs, we're still going to have those 4 rigs operating at Moss Lake. And it doesn't change our focus. I think the prioritizing these targets is quite easy. First of all, we had this high grade feeder structure. So when we did that, and I've worked with this guy, he's the world's most renowned structural geologist. His name's Dr. Brett Davis. He's out of Australia. He's going to be coming over for 2 months to work with our team and work with Pete Flindell in order to kind of figure out the structural attributes of this deposit, because we want to find where these feeder structures are, because they are going to guide us to, I'll say, the most robust portions or parts of the deposit, and they're going to increase, let's call it, they're going to increase our mineability of those areas, rather than just look at a 0.3 cutoff and 1 gram deposit. We're looking for starter pits. We're looking for high grade areas where we can maximize the NPV, maximize the cash flow at a PEA. So those are going to be the targets for Moss Lake. And stepping it out, it's meaningful because we're going to have to pull a lot of ounces into inferred. It doesn't mean that they're going to stay in inferred. It just means that there's only so much infill drilling we can do, and with time we have to do it. And let's face it, we're trying to create a story here, and that story we want to be attractive to many, many mining companies who have the capacity to kind of take this forward. The original PEA had a $500 million capex Canadian. And that was the updated one from 2020. That's the pre-construction capex, and that's what I call capex. What's it take you to get into production? Because everything else is paid for out of your cost of out of your production. And that $500 million is a project that's available to a lot of companies, and I could go raise that money today. When we're talking about a $1.5 billion project, we're talking about 3 times the size, 3 times the capital for the most part. We're talking about a limited number of maybe 30 or 40 companies who this will be attractive to. And when Mark Bristow pounds the table at the Denver Gold Show or at Mines and Money and says, we are looking for tier 1 assets in tier 1 jurisdictions, and that's our number 1 priority, well, I would like to deliver one to the market like that. And that's why we have taken the stance and said, you know what, let's focus on Moss Lake. Let's leave this. We'll work on this upside to the best of our ability. But this upside is starting to become important enough that we need to understand it before we just push it aside.
Okay, that's a really important distinction between you and some of the other companies that come on here who talk, they pretend they will get into production ourselves game. Okay, you're saying, having worked at tier one companies, the Kinross's and Katana and Newmont and blah blah blah, you know what they need to see. You can package it up for them, but you're going to have to help the market understand. This is what the big boys want. This is what whether it be Mark Bristow or whomever. So we need to package it in this way. So making a nice, neat, tidy, small project is one thing, but we don't need to waste our money doing that. We can be a little bit broader because as long as the data is there for these companies to interpret the data and model the data how they want, we can show them that this is truly tier one, not just saying it, but truly tier one. And the jurisdiction is the jurisdiction, right? So can you just really clear, simple terms? What does the data need to look like for those guys? Because it's not the conventional prepackaged study route on the entire package, is it? No,
and it's not just let's drill some holes, get the assays, put them in the market, and wave our arms. It's not that at all. We've gone through a very extremely robust process. We've used Oryx Geoscience in Toronto to cleanse all of the data from a QA/QC standpoint. They have collaborated all of the data, 30,000 units of data over the last 50 years of exploration that's gone on in this project. We have digitized everything, and it's on a database that is of a quality that the majors would use themselves. And it's been cleansed from a QA/QC perspective. We threw out a lot of data simply because it didn't pass the QA/QC test. And we've been adding to that data. Now, it's not just about drilling. It's about project viability. I look at this, and this is what attracted to me originally. Yeah, you can see 4 million ounce deposits, or not very many, but you can see million ounce deposits in lots of places. But will they ever be a mine? And the answer is not all of them will be, and very few of them actually are. Maybe 10% of them, maybe less than 10% of them will actually become a mine. And they need either hyper gold prices to do it, or they need, or there's circumstances in order for them to be a mine. The circumstances and the factors required to build this project at Moss Lake, every box, in my view, is going to be ticked when we're done. And that is infrastructure. We are on the Trans-Canada Highway. We have 10-cent kilowatt-hour power running by us. We have natural gas, a 4-lane highway, 2 main rail spurs, CN and CP rail, with a rail spur on our site. We're 14 kilometers off that Trans-Canada Highway. This whole shebando on Greenstone Belt is really ripe to build a mining camp like Timmins and Red Lake and Abitibi. It's actually better because we have infrastructure available. So then we say, okay, if it's not just about the drilling, yes, it's about project viability and about the infrastructure. Tell me now the other factors of the project that are important, because it's not just about the resource, it's about the metallurgy. So we're going through an extensive a program of geometallurgical kind of domain characteristics, and we're identifying them, and then we're going to do a ton of geometallurgical and metallurgical test work, because again, we need to de-risk this project on every box that somebody's going to look at this on. And metallurgy can kill projects. Not going to kill this one, but we need to prove that. And there's been some metallurgical test work done so far, but not a lot.
Right, but everything's saying so far for me, Brett, is what lots of other companies come on and talk about. What I'm trying to help get you to help me understand, and therefore this audience understand, is right. When you're talking to these large cap companies, and even some of the mid-tier companies whose balance sheets could take this thing forward, what precisely, or how precisely do you have to lay the data? Do you have to say, look, we believe that this is the best location for the open pit. This is the best location for the mill. You know about the infrastructure. Clearly the grade is fairly homogeneous. It is, for the following reasons, it is quite like what you see up at Detour, and others. But I'm more interested in the precise nature of the conversation, which says, because otherwise you just sound like everyone else, right? What
Sure.
is that conversation that says, hey, Brett, lay it out like this, I'm in?
Yeah. So if you look at the historic PEA, and well, we're obviously going to do a new one, it illustrates everything from site layout, infrastructure, camp, mill, tailings dam, all of that, and the optimum locations for that. We'll redo that, and part of our PEA will be we'll be laying all of that out once again, and then laying out the path to construction, and that'll be permitting. It'll be obviously financing, and it'll be the construction period. So we'll be laying all that out in great detail when we do the PEA. But again, the starting point is they've already done this once on a smaller scale for the 2013 PEA that was updated in 2020, and not a lot has changed. Nothing has been developed up in this area. It is for the most part uninhabited, and parts of there's a lot of parts of Canada that are very uninhabited, even those near the Trans-Canada Highway.
Okay, here's a sort of slight segue in this. I spoke to a CEO last year of a mid-tier company. He'd said, right, I've looked through 25 DFSs this year. 5 of them are viable, not because of price, not because of anything other than in economics. They're all broadly the same. They're always saying, "Oh, we're all great projects." But he said the work that was done was of such a poor quality that when I'm looking at this data, 5 of these things can become a mine. The rest is fantasy. That's why I'm pushing you on this, in terms of your experience of, you've referred to earlier in the conversation, not many of these things become mines. So what leads you to believe that this is one that will become a mine?
It's my gut, it's my instinct, first of all. And after 36 years, I have good instincts when it comes to this, but that's not enough. And we are going to use a tier 1 consultancy to perform the PEA. We're not going to do it quasi in-house. We're not going to, have Joe down the street do it. And I've seen these, and I've seen kind of one-man consulting firms, and it's not a slam against them, but they get steered in a particular way. We may end up having to give up some of the upside in order to preserve the quality of what it is we actually present at the end of the day. So we may have 10 million ounces, but maybe only 7 million ounces gets pulled into the shell because the consulting firm's only comfortable pulling that amount of resource in because that is a viable project. And yes, there's upside beyond that, maybe phase 2, maybe phase 3, like Detour did. But they're going to be very conservative because they have to stand behind this. But I also have to stand behind this. And when I look at the majors and who they use, that is who we're going to use. I'm not going to subrogate and try and maximize the value because, again, it gets criticized, and it's easy to criticize the quality or the assumptions made along the way. You're trying to, everybody's trying to kind of maximize the NAV or the NPV of the project they're doing so they can maximize the price. And I'm trying to maximize the price from a realistic standpoint on a project that's going to be very doable and credible. This is about as much credibility as it is about maximizing the price. And if for whatever reason we say that, hey, this is $1 billion project, and the consultant determines it's only 780 or 800, then that's the real number to me. It's not what somebody tells you they think it's worth. It's what somebody will pay for it on data that's of a quality that they can accept on their own. I don't want somebody coming in redoing all the data. Now, that's why we've said from the very beginning, Pete and I said that we're going to do this to a standard that'll be acceptable to the major. Everything we do, policy, procedure, QA, QC, drilling, our standards are going to be just like we're used to working in our whole careers. And we're not going to deviate from that. And there's a cost to that, but we're not deviating from it.
Yeah, well, I think the proof will be in the pudding because you've laid out your stall, and the mid-tiers and majors will come along and have a look. And if they say no, it's going to be a little bit harder for you or some other group to can raise the money because you've said this is what real looks like, and anything less than that will not do.
And I think there's a way to do this as well, Matt. Because otherwise, if you run into a wall and you don't create the environment, the auction environment, or that buyer environment that you want, it's like selling a house. If all of a sudden you think it's worth X and you want to sell it and you get a whole bunch of people come through your house and you get no offers, that's not a good situation to be in. It means your price is going to go down. And I don't want that situation. So there will be, I'm going to bring a whole bunch of people to the stable. But there may be a point in time when I close the doors to the farm and I don't let anybody in. And that is going to kind of create the environment that depending on the results, but I don't want to be in a situation where, I have to close. I don't have any offers. Everybody looks at this and says, well, that's not for us. So this is a balancing act, about bringing people along and getting people to understand the story. But there always has to be, that hook. There always has to be that greater upside. And maybe the copper component is that, and maybe the cobalt component is that. Every gold company, every major gold company is also a copper company in this world.
Absolutely. We haven't touched on the copper component. I mean, again, last time out, you said you would leave maybe 10, 15,000 meters to the copper component. Has your thinking changed on that? Yeah,
it has changed. It's actually going to be greater. And I think we're going to try and hit the cold stream area a little harder than we originally planned. Again, it's early times to say that, because we're still trying to mobilize drilling companies in order to bring the rigs in order to do that, and the permitting, et cetera. But strategically, I think we want to put more meters into the ground up at Cold Stream. Finding this cobalt on the kind of unsampled North Cold Stream core is more significant than I'm leading on to be. I put it in the market, so it's very open out there. But we found 0.2 to 0.5% cobalt in a couple of samples at North Cold Stream. That's a mine in its own right today. Now, how contiguous is it? And this is what I said. I don't know, because it's one data point doesn't make a trend, and we need multiple data points to figure out whether this is real or whether it's just an anomaly. But obviously an interesting sign. And we're going to chase it up, because this is important. And we just saw visible gold in the last holes we were drilling. I put that in the marketplace as well. So I think there's a lot of signals and a lot of signs here that point to a kind of a district scale mining camp beginning. I remember seeing Timmins grow from very early on in my career. It already was quite large, but it was starting to kind of really grow exponentially. And Red Lake did the same thing. They went from 2 or 3 mines to 13 mines, and they really grew, and they grew very quickly. I think the Shabandawon Greenstone Belt can be the same.
Okay. Well, a lot to do between now and then. In the meantime, focus. So we should be focused on resource update by what, end of this year, beginning of next?
Beginning of next. I think January will be the time we put it out. We're going to do a lot of work prior to that, but January is the timeline.
Okay. And then PEA sometime in Q1?
End of Q1.
End of Q1.
It'll take 3 months.
Right. And you've got enough money to get there?
We got enough money to get there. Good. But that would run the coffers down quite low.
Right.
But
on vapor.
Towards the end. Yeah, on vapor. Yeah, we could certainly get there. That's not my style to run the coffers down to zero. But I think we have a lot of news flow coming out. So we have drill results every 3 or 4 weeks coming out. We have other things that we're doing that will come out on a regular basis. There's going to be a lot of news flow that comes out. And quite frankly, the macro is the macro. I can't control that. I don't drive that. But I still believe that gold is going to trade between $1,800 and $2,200 for the foreseeable future. I'm not a big $3,000 gold guy. I don't even think it's going to spike up that high. But I do think we're in a new level here. We've just seen some resistance, and we're down at 1930, and that's the resistance. So I think we're in a new paradigm now. We just had interest rates, jack up 25 points and 50 points. We're going to see gold trade here for a while.
Yeah, I agree with you completely on that. I think we have the same belief system on that. Hey, well, look, Brett, thanks for the update. And sorry, I was going to drill down on you there, but I just want to be the market to understand where you're at, because I say, when you've made some of these announcements in the past, I think it's not registered exactly the model that you're employing here. And I think that obviously the drill bit will talk a little bit more, and hopefully some of these other initiatives will do for the rest of the year. But stay in touch. We'll see you soon. Maybe get a bit technical next time. Okay.
Will do. Okay, Matt. Thanks for the time.